Okay, good. So you should be able to see now a headline like that. Now, the only thing is I can't see any questions here, Jana, at the moment. How do I see the questions? Can you see that?
Yes, we all see your screen. I guess we can all hold the questions till the end and then you address those.
Yeah, that's fine. Let me get the presentation underway then, and what we'll do is I'll take questions at the end because I can't see the questions for some reason on Novi. When you project the screen, it's difficult to see the questions. Unless I can log in on another computer, I might be able to do that. Which I'll do now. Tell me when you want me to start and I'll get underway because I'm ready to go whenever everyone's back.
We are all ready for you whenever you're ready.
Excellent. Okay, sorry about that, everybody. A little technical glitch, but anyway, it looks like A, you can hear me, and B, you can see my presentation. So I've only got about 50 minutes. I'm going to please leave the questions to the end. I really would appreciate that. I've got some things to show you today. As Rolly said there, thank you, by the way, Rolly, and Jana for inviting us in to speak here. What I'm going to talk to you about today is a trading strategy from the 1930s. This is the Business Insider magazine. And it says the headline is presenting the secret trading strategy from the 1930s that hedge funders don't want you to know about. Underneath it, it says the large operator does not, as a rule, go into a campaign unless he, and I'll add or she, sees in prospect a movement of from 10 to 50 points. Livermore once told me he never touched anything unless there were at least 10 points in it, according to his calculations. So writes Richard Wyckoff, the legendary trader who in the 1930s wrote a manifesto that gained him a cult following on Wall Street. And let me ask a question, and I will go and be able to look at the answers here. How many of you here have heard of the trader Richard DeMille Wyckoff? Okay, so how many of you here have heard of the trader from the 1930s called Richard? Okay, and I would be surprised. A lot of people are starting to pick up on the Wyckoff method. So I'm not totally surprised if there's a lot of people here who have heard of him. But what I'm going to talk about today is something called volume spread analysis. And so Richard Wyckoff, the legendary trader who in the 1930s wrote a manifesto that gained him a cult following on Wall Street. His 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and technique, is out of print and somewhat difficult to find these days, although not impossible. But even in 2013, hedge fund managers still swear by this book. One of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks a speculator stock up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. Now, I listened to the last part of Jake's presentation that he did just before I came on, and he was talking about the news. And it's very, very interesting, actually, that the news and the media very often will put out a news report that will cause what we call a shakeout in the market or a panic, or will do the opposite, will encourage you to buy what they think or what you think is a safe haven. Now, again, let me ask you, what was the safe haven for traders and investors back in 2011? What was the safe haven for traders and investors back in 2011? Well, I'm just going to log in so I can see your answers to this, but I'm assuming you're all going to be saying it's gold, because that's in fact what it was. Now, the reason I'm going to show you this chart today on gold is because it's a classic example of how we analyze a chart by using something called volume spread analysis. Volume spread analysis. Now, volume spread analysis, as I'll show you, was developed by a trader called Tom Williams, and some of you may well have heard of him. You just type that in. And Tom was a syndicate trader based in Beverly Hills in California, and he was based there in the late 1900s. See from this site, it says, what is volume spread analysis? Well, most traders are aware of the two widely known approaches used to analyze a market. Fundamental analysis can be used in each approach, but generally speaking, fundamental analysis is concerned with the question of why something in the market will happen. And technical analysis is concerned with the question of when it's going to happen. However, volume spread analysis is a third approach to analyzing a market. It combines the best of both fundamental and technical analysis into a singular approach that answers questions of why simultaneously. Now, you should all be able to see shortly a chart of the E-mini S&P futures contract, and you should also see a chart of gold. I'll let that come through on the projector. Now, I want to start by talking about how the markets are moved. Okay, and the markets are moved, and those universal laws are the law of supply and demand, cause and effect, and effort versus result. Now, I want you to look at this chart here, and at the bottom of the screen, I've made it very big, almost half the size of the chart, is what we call volume. Volume is activity. And on the right-hand side, we've got the gold chart. And again, you're going to be able to see volume at the bottom. Now, let me ask you, if you look closely at the chart, here we're in May 2014. Back here, we're in 2012, all the way back here, as you can see, 2011, 2012. Do you notice, everyone, any unusual volume spikes on these charts? Yes or no? You notice any unusual volume spikes on this chart? And I can now see the chat area, so you should be able to type in, and I should be able to see your questions now, which I now can. Hello, Kishore. Okay, good. Okay. I want to show you now the premise of the rest of this presentation, which is how we follow the footprints of what we call the smart money. Now, my book is called Trading in the Shadow of the Smart Money. And I'm going to give you the first 4 chapters of that book absolutely free today. And I'm also going to give you another book called The Game on Wall Street by Hoyle, which is over 100 years old, but completely changed the way I learned to trade and how I read the charts. And I'm going to show you now the mechanics that drive the markets. So let's first of all look at the news as it's reported. Okay, and what we'll do is we'll go up here and we'll look at what happened in 2011 and you will shortly be able to see a headline. And this headline, 11, can everyone see this? And it says, debt crisis, stock markets panic, Friday the 5th of August 2011. Now, when we see a headline like this, and the stock prices around the world and the markets have been falling, volume readers and Wyckoff experts look to see if professional money are actually buying and not selling the market. And we can see that in the volume on the price charts. We can see that by looking at unusual volume spikes. So we see here that during the first week of August and the second week of August, panic set into the markets. And we all remember it. It was all very well publicized. However, if we now look at the chart, and this is a chart called TradeGuider, it's a piece of software that we've developed, it's proprietary software, you will see that we have a green indicator underneath this week. Here it is, and you can see that we've got a very high volume bar. It's a down bar, which means it's closed lower than the previous week. But look at where the price closed. It closed where my green line is. So it closed up near the top of the price bar. Now think about that. If all of that volume was panic selling from the professional money, okay, you would then see actually that the panic selling that was there. There's my little son jumping in on me. You'd see there that the price would close on the low of the price bar, but it doesn't. It closes up near the top. And this is the reason that we're seeing such a strong bull run in the S&P. And this is called a shakeout in the market. Now, a shakeout is done when the news is very bad. Okay, and what happens is, we'll see here in a second, hopefully that will come up, but there's an indicator that describes what's going on in that time frame. And what's happening here is professional money are actually buying into this chart. Now, what is interesting is last week, if we go to the right edge of the chart, you will see a signal here, a red indicator, and that red indicator is telling me that the market's going up. But what do you notice about the volume, everyone, at the bottom of the chart compared to the previous 2 weeks? What do you observe? What do you notice about the volume compared to the previous 2 weeks here? Yeah. Very low, says Kishore. Steve says it's decreasing. Yeah. It's going down. And what's happened to price this week? Has it gone up or has it gone down? What's happened to the price action today? And it's been blamed, ironically, on a Portuguese bank. I love the way the media report all this. It's suddenly the fault of a Portuguese bank. But ultimately, we knew last week, using volume spread analysis, that there would be falling prices. And we actually have a trade alert service that warned our customers on Sunday night that we would see lower prices. Now, we know, based on something called a point and figure chart, where this market is likely to go. So let me go back then to the gold chart, and I'm going to show you something even more interesting now. We know that the S&P was shaken out, but we also, and the word shakeout means exactly that. It means that the professional money have marked prices down to a level where they believe prices are now good value. Now let me show you what happened over here. This price bar, the volume, as you can see, is very, very high. And it's the highest volume we've seen for several years in gold. What was the news that was accompanying this rise in gold prices? Well, we can go and look. So what happens here is professional money that move the markets have to unload into a rising price, because that's how they make profit. They don't make profit by selling at lower prices. They make profit by selling at higher prices. That's how the market moves. So on that week, when the stock market was collapsing and everyone in all the media was saying, get the hell out of stocks, buy. But volume spread analysis shows that professional money were indeed buying. We've got a big green indicator under there. And again, I don't think I can show you using on Novia. It won't allow me to show you the pop-up dialog box that we have, which explains the indicator. But in the book I'm going to give you, it does explain it. On Monday, August the 8th, Goldman Sachs raises gold price forecasts. They raise them. Now that makes it look very clever, doesn't it? Because what actually happens to the price of gold for the next 2 weeks, it actually goes up. And guess what happens? The public rush in here and start buying. But they're buying a market top. Because what happens when the price has been marked up like this, professionals can sell into that. And how do we know? Well, if we look very closely at this price bar here, I've put a red line through where the price closed. And it closed right in the middle of the bar. Now think of some logic. If all that volume was buyers, we wouldn't close in the middle. But because of the momentum of price, for the next week or 2 weeks, we actually do make a high of nearly 1900 in gold. But that was the top. That was the top. And in fact, I did a YouTube video in September warning traders that this market was now weak. And why is it weak? Because the professional money, well, wash and rinse, says Wayne. Call it what you like. This is how the market works. And this is what you'll learn. And the book I'm going to give you about the Wall Street game, which was written by Hoyle, describes how this happened over 120 years ago. Nothing has actually changed very much at all. So when we look at volume, we understand that volume is activity. Now, I just want to ask a question again because I didn't see the answer earlier. So hopefully you can answer yes or no to this. The question is, how many of you here in the room believe that the financial markets are manipulated or can be manipulated? Just yes or no. How many of you here believe that the financial markets can be manipulated? Okay, very interesting, very interesting. Okay, so we're getting those talks. Very funny. Well, let me explain. In my book, I talk about market manipulation, but I don't talk about it in a negative sense. And let me explain why. We've had a big story. How many of you heard the story of Barclays and several banks manipulating the price of the LIBOR rate? I mean, it was very famous last year. Have you all heard that story where they admitted actually to manipulating the price of LIBOR? Now, that's a major key interest rate that infects the currency market. So let me just say, for those of you who said no, you're not sure if the markets are manipulated, go to the website marketmanipulation.com, and that's the site where you can download the book that we've put there for you and a video. And that video will show you and prove to you beyond any reasonable doubt that the markets do get manipulated. Not all the time, but when manipulation happens, guess what happens with it? Ultra high volume. Massive volume comes into the market. And for us, as volume readers and Wyckoff experts, this is the footprint that we've been looking for to get into a position. Now, what I'm going to show you in the next 50 odd minutes, I'm going to show you some trade setups. I'm going to show you how the news affects what you think. I'm going to show you why massive volume spikes on a chart must be adhered to. You must pay attention to them because they're telling you something. There is a footprint from the professional side of the market. I'm going to show you a trade alert that I did this morning that I actually traded, and I'm going to show you and explain to you the actual setup. So there'll be no doubts about what I'm showing you. I'm not going to talk about percentage accuracies. I'm not going to tell you that everything I trade is 80% or above. You won't hear that from me. What you'll hear from me today is charts tell the truth. And everything you need to be successful is into this chart if you can read it. And I hope at the end of this 1 hour, you will now realize the importance of volume in your trading. The statistics, anyone can talk about. I can show you things from the past. We can blow your mind with all of that. I want to show you today how volume and the analysis of volume, if it's done correctly, will give you an edge in the market. And so let's start then by talking about a UK and a US stock that was in the news in 2010. Can anyone have a guess what that stock might be? It was the biggest news story around the world during 2010. Can anyone have a guess what the stock might be? And Gillian, you should get this. It's in my book. Oh, well done. It wasn't Enron. It wasn't Netflix. Okay, let me give you a clue then. I'm now going to go to my TradeGuider chart. And we're going to look at a US and a UK stock. It trades on both exchanges. And I'll give you a clue, everyone. It's a British company. So there's a clue for you. It's a British company. There's a clue. Anyone got any idea? It's a British company. And it produces stuff that goes into your car or your automobile. Now, if that isn't a clue, I don't know what is. Good. Okay. So, we're talking about the stock, British Petroleum. British Petroleum. Okay. Okay. All right. So I was actually doing a presentation at MIT in Boston in 2005. And I was asked after the presentation, I was there for 3 hours. It was the Boston Traders Group, great bunch of people. And they said, look, Gavin, is there any stock that we should definitely be thinking of buying at the moment? And I said, yeah, British Petroleum, BP. And of course, the whole audience started laughing because they said, have you seen the news? And of course, I'd seen the news. But I'd also seen the chart. Now, again, you can't help but notice the massive volume. Now, I don't think I can actually show you in Omnovia the actual dialog box. It won't allow me to produce the text, but I'm going to send you. Oh, yes, it does. There we go. We did it. Okay. So now you should see a green dialog box which explains what's actually happening on this chart. And you can see that BP actually doubled in value within 6 months, but very few traders were buying it. But I tell you who was buying it. Professional money cannot hide their activity. R said, if there's no manipulation, there's no dollars to be made. You're absolutely right, R. That's exactly right. The markets have moved the way they've moved for hundreds and hundreds of years because of that. So I'm not, please don't get me wrong, I'm a former police officer in England many years ago. I'm certainly not a big conspiracy theorist, but I was taught to trade by someone who was himself a manipulator of stock prices and wrote a book on it. And he showed me, he said, Gavin, when you see volume on your chart, you're getting inside information without even knowing it, as long as you can interpret it correctly. Now, this is called stopping volume. And what does it do? It stops the downward progress of the BP stock price that was collapsing. During June, we were told on this week, we cannot cap the well. That's the media all over the world. However, someone knew something, because the volume for those 2 weeks is the biggest amount of buying volume I'd ever seen on a chart, which is why I'm showing you this example. It's absolutely enormous. And so what we now look for to go long on a chart like this is a pullback into this area over here, but the volume is now much lower. And you can see here, we retrace, but there's no selling pressure in the market. And this is one of the things that you'll learn when you learn volume spread analysis, is how to recognize the initial footprint and then the trade setup. Now, for many traders who are just starting with volume, it's quite a lot to learn because there are different principles, and you can see that there are red and green signals on the chart in different places. We will teach you where the best and the most optimal place to trade actually is. And so I'm going to show you now a trade alert of a trade that's currently in action that we did this morning in our alert service, tradingthemarkets.com. And I'm going to show you a trade that's actually running right now. So what we're going to do is we're going to talk about the, and let me just find the alert. Okay, and can you all tell me when you can see our website, tradingthemarkets.com? And you should be able to see a short trade on natural gas. Can everyone see this? Okay, you won't be able to see any volume. Wayne says big boys like to buy at wholesale prices. Absolutely they do. Yeah. Okay. Can you all see this? Okay, so let me explain what this is. This was a short trade alert that we sent out today for natural gas. So some of you may trade it, some of you may not. Natural gas is a very volatile market, and in fact we use time frames, but we don't use small time frames. I think I heard Jake say earlier someone was using a 1 minute time frame. VSA does work in a 1 minute time frame. I could show you a chart, and it will get rid of a lot of the noise if you just look for the volume spikes, which I think someone called the fake out trades. That's actually when you get washed out of a spike on volume, you can actually go the opposite direction. If the market's gone up and it's on very high volume, you can short it, as I'll show you. But this trade setup was based on a short trade of natural gas, and I used a scanner that we've developed, which is built into several trading platforms, Ninja Trader, it's built into Infinity AT charts, Sierra charts, and it emails me when it sees unusually high volume. So here was the alert that we sent to our customers just after 7 a.m. Pacific time. Okay, so you can see exactly, you can read there what we were looking for. We were looking for what we call signs of weakness to come in. And indeed, as I'll show you, the market did fall because of a signal called a reversal bar. Now, let me just show you the chart. And if you want to see that video, by the way, I'll post it in the room before we go, so you can actually go and have a look at the video for yourself and see what we said. But what I'm going to do now is I'm going to show you the actual chart of natural gas. Now, I'm scanning. Of course, I don't have time to watch every single chart, so I've preset in my email alerts that warn me when very unusual volume appears, because that's telling me there's a potential trade setup coming. So we'll scroll down here. And now I'm going to show you what happened. The alert was triggered because of this price bar right here. Now I'm going to ask you a few questions so you can start to understand in your mind what the chart is telling you. What do you notice, everyone? Please type in about the volume compared to the previous 2 or 3 hours. What do you notice about the volume compared to the previous 2 or 3 hours? Please do contribute. I want to see that you're looking at what I'm looking at. This will help you. What do you notice about the volume compared to the previous few hours? This is a 15-minute chart that I'm looking at of natural gas at the moment. Okay, it's definitely not lower than the previous is behind us. Okay, so this is behind us. What do you notice about this volume compared to the volume behind it? Julian says Yao Ming. Well done, Julian. I know you're a customer of ours, so that's not surprising you know that. It is. It is definitely increased. Okay, that's important. What do you notice when we talk about the spread of a bar? We talk about its range, if you like. In America, you could call this volume range analysis. But what do you notice about the range or the spread, which is the high and the low of that 15-minute price bar? What do you notice about the high and the low of that, compared again to the other bars behind it? Yep. Yeah, Kishore, you're right. Kenneth, very big range. That's very, very, very important. When you're using volume, you've now got massive activity. This is the activity of the smart money. This is the high and the low of the bar, but now the most important part of our analysis. Where does the price close? We haven't got the open marked. We don't use the open. Where does it close? High, middle, or near the bottom? Where does it close? High, middle, or near the bottom? Mm-hmm. Near the bottom. What color is the indicator and the VSA indicator here, and what is it telling you? Let's read it. It's telling us SOW, which means sign of weakness, has appeared. It's a serious sign of weakness. It means that, as someone called them earlier, a washout bar. They're washing out people in this particular bar. The minute that this bar begins to form and goes below the low of that bar, immediately triggers a short position. Immediately. And if you now use a 5-minute and a 3-minute chart, you will see the trending system that we have, which again is proprietary, changes to red. So it does mean you can use smaller time frames. And here is the 5-minute chart. Just wait for it to load. Here is the same signal almost. It's almost the same setup, as you can see at the top. So you've now got on 2 time frames the indicator. So what does that tell you? This is the washouts we look for as VSA experts to get short. But most traders who see the price suddenly going up, they buy. You don't buy on up bars. You don't buy on high volume spikes. The only time you'll buy high volume spikes is if the market's falling, like with BP. This is a trap up move. And again, we have, I'll let you read that now, a description of what the market's done. You can see here that there's 2 red indicators on these bars. One of them is telling us that the market's got marked up. That's to encourage buyers that are using technical tools. So if you're using a MACD, a stochastic, a moving average, you'll be trying to buy in here. The next bar goes up and you think, woohoo, I'm going to the races. I'm going to make a lot of money on this trade. But the trade alert we sent out was short. And this is where the market is. And in fact, just a few minutes ago, while I've been on air here, we've had another one of our indicators, which again is perfectly tradable. And it's called, we saw it earlier, no demand. Again here, we can see that the market went up. There's no volume there. There's no interest in the upside. Wayne's saying it trapped longs. It trapped a lot of people, which is why I wait for the news to come out. This was because natural gas inventories were released. And then I trade the reaction after the ultra high volume bar has appeared. And in my book, Trading in the Shadow of the Smart Money, the first 4 chapters, which you're going to get absolutely free. In fact, if you go to marketmanipulation.com and you register from there, we'll send you a copy, an entire copy of my book. I'll give you the whole book, absolutely free of charge. It's $99 if you buy it from the site. You'll get. I'll email you a copy of my book tonight. Print it out. Read about this signal. Because if you see, this is live, I'm not doing this in hindsight now, I'm not using statistics or anything in the past. That signal appeared because it's in exactly the right place. The market has been marked up, sold into, and every time it tries to go up, professional money have no interest in the upside, and that is what has fallen. And if you register from marketmanipulation.com, which is the website we own, you will actually see the video that I believe was being referred to by Jake from Jim Cramer. All right, I think that, I can't say for sure because he got cut off at the end. But if it was that, the actual video where Jim Cramer explains market manipulation and how it works, brilliant video, 8 minutes long. It's still, they keep trying to take it down. It's available at the website marketmanipulation.com. Just type that into Google. Just type the word market manipulation in, and you will find there's a lot of information out there which will actually help you to understand the mechanics of the markets. Now, I didn't ask earlier, but I would like to ask you all, because there's a lot of you here, what do you trade at the moment? Are you Forex? Are you futures? Are you options? Just type in, what do you currently trade? What do you trade? Okay, I'm just looking. Okay. All right, so we've got a whole mix here, haven't we? Well, we've got some great news for you. If you're using volume analysis, it works in all markets, including Forex. I know, people sometimes say, you don't get volume in Forex. That's wrong. You've been misinformed. You do get volume in Forex. In fact, you're here today, you can see, let's bring this up. Okay, this is the British pound. Okay, and you can see the British pound is moving higher. Now, the reason I'm showing you this particular chart, this is spot Forex, okay, but I actually trade the currency futures contract, and I'm going to put the two together, okay? I trade the 6B, and I use the Infinity AT charting platform, and I use Infinity as my brokerage firm, and I'm going to show you now a very important trade setup which will confirm okay, good. All right, let's put the two together. All right, so on the left here, we have a green indicator. This is a 15-minute chart that I'm currently trading. Now, when we trade in our live trading room, we trade a live account with real money. Okay, so earlier actually in the Infinity live trading room, and apparently, Rolly, I was stepping in for you. I didn't realise that. so you owe me a beer, mate. But we did trade several trades during this morning, and I want to show you, because when someone shows you charts, it's all very good showing something that happened in the past and saying what it did. I'm actually trading. I trade a real account. So I traded one contract earlier on here in the pound based on a principle, and I'm currently in that trade. And I want to show you, it's only one contract. Okay, I don't trade because in the live trading room, I'm trading one lot at $6.25. I do trade a much bigger account for our fund, but when I'm trading publicly, I want to show people that I'm putting my money in the market when I say I am at the right edge of the chart. And if you join the tradingthemarkets.com service, you'll see that. Now, why is this market going up? Okay, it had to, and there's a very obvious setup here, and it's a setup that's probably one of my favorites. Now, it's not going up much at the moment, okay, and what I'm actually going to do while we're on air here, I'm going to bring that stop to a break-even position because it's not moved much. Usually, I get much bigger movement on this trade. I think it's just the fact it's a Thursday and there's already been a big move in the market. Now, this is the Infinity AT charting platform. This is my live account, 4855. Again, we only trade maximum in the trading room of 3 contracts. So usually, if I'm really, really sure about a trade, I put 3 contracts in. Today, I traded on the S&P 2 contracts, and we went short at the beginning and reversed our position. And here now, we're going to talk about, this is the spot Forex contract, and you can see a few minutes ago, we had a green indicator about half an hour ago, 45 minutes ago, as you can see here. I'm trading the futures contract, which is over here, and you can see we've got a wide spread down, but look at the volume on that bar. Now, the reason I'm long is because if that was, or it's a green signal, all right, it's green, it's not red, it's green, and it's telling me there that there must be buyers down at that price action level, okay? And we can see we're breaking out as we speak. We're breaking out right now. Now, you can see on the right, we've got a spot Forex trade running. On the left, a futures. I do trade both markets. I trade the spot Forex and I trade the futures market. But I want you to look very carefully. It took a long time to get up there because I always find when you're trying to go long, it seems to take a lot longer, excuse the pun, than it does to make money short. But the reason this is breaking out is that is what we call a reversal. And that bar there, let me see if I can show you the indicator, is one of my favorite setups in a trend that's moving higher. Okay? And We don't know how far it'll go, but I don't care. I'm at break even now. I don't care what happens. I'm done. I'll let this run, and it could run all night. Sign of strength number 35. Now I'm going to read you this description. This should be a down bar on volume greater than the last few bars, but can be gapped down, often on bad news, which applies to bigger time frames. The bar should close well off the lows to show demand has absorbed the supply. Remember, the professionals have to buy on down bars and will also cover shorts, which adds to the volume. Panic selling from those traders on the wrong side of the market is absorbed by the market makers, who now find prices attractive. Now, here, if we look at the background here, it says there should have been a down move in the background. There was, right behind us over here. And we'll notice, again, it says the next bar, read this, this is how you learn to read a chart correctly, because we've described what you look for. The next bar should be up. What does up mean? It means it closes higher than the bar behind it. Now, very simply put, think of the logic. If that's all selling volume, the next bar on this 15-minute chart would not close above the 50% level of the bar. Okay? And you will learn to interpret this. That's what we teach you. Okay? Now, what has that got to do with market manipulation? Absolutely nothing. It's just that volume is the footprint left by the manipulators. And when they move into a market, especially a stock, you get certain principles that appear, as you'll read in my book. And please do read about a signal which is called bag holding. All right, it's in my book. It's in chapter 6, I believe. Go and read that signal, because there's a couple of stocks at the moment in the US, UK, and Australian markets that have all got that signal. And there are very few indicators in our software, and I'll call them indicators, that I would call buy and sell signals, but bag holding, I can rest assured, is one of them. Wayne, you're right. Yeah, there was buying back here, in here. And again, if we look at where we're at on this British pound chart, we've got weakness back here. I'm not going to stay in the trade too long because we've got this old top, but what I think is going to happen is they're going to come and retest these highs up here. And that is why they marked it down. And again, if we look at the trending system here, you can see these diamonds are just starting to turn green. Now, someone mentioned earlier about a 1 minute chart. I'll show you now how you can actually look at this stuff on a 1 minute chart, believe it or not. And I mean, it's not, I'll be honest, I wouldn't trade a 1 minute chart, but you'll see all the principles for those of you that are scalpers. Now, again, this is a 1 minute time frame I'm about to show you. Okay. Now look at down here. This is a 1 minute chart. This is what you call a washout bar, what the gentleman or ladies mentioned earlier. Yeah. Okay. We call it climactic action. But look what's happened. Okay. So even if I was trading a 1 minute chart, I'd have seen this setup. So you can actually trade a 1 minute chart. And I know I never do, because look, all of these diamonds here, you'll learn in our system, if you try TradeGuider, you try our software, these diamonds are very that we have. But you can see there that the software on a 1 minute chart has picked out the setup that's on a 15-minute and the hourly chart. And it's very difficult to argue with a live chart. Okay, it's all well and good looking back in the past. This is live. This is real. It's at the right edge. Okay, and it's real trade. I mean, that's real money on the line. And that's how I teach. I like to show people that once you can recognize, I call them Yao Ming bars, which is quite an affectionate name. I don't know how many of you have heard of Yao Ming. He was a basketball player with the Houston Rockets. And I always say, imagine that the volume down here is human beings. And, you know, this is Gavin. I'm about 6'2". I'm pretty tall. I'm a former policeman. I had to be quite tall. But then up here, there's Yao Ming. Look, I mean, that's 7'6" as a human being, this red bar. But again, think of the logic. If that there was selling into that volume, which a lot of people think it is because the price falls rapidly, the next bar would not close higher. And again, if you read the dialog box, even on this 1 minute chart, you will see that you can analyze a 1 minute chart, because what it's going to tell you to look out for, if we read the dialog box here, look, it actually tells us it's confirmed. Okay, this bar should be up, which means it's closed higher, which confirms it. Very straightforward. And since my entry, as you can see, it's moving higher. It's slow. It's not, but I usually trade these setups in the live trading room just after the news, 30 minutes after the news comes out. That's when I get in, and then I get a much bigger move. This is a bit laborious. You know, it's taken from the entry, it's taken nearly an hour and a half, maybe longer actually, for nearly 2.5 hours just to get up there. But that's trading. I'm on the right side of the market, no complaints there, and you can see the VSA principle at work. Okay. Now what I'm going to do, because I'm actually going out shortly, I'm not going to leave the trade running. We'll try and lock in some of the profit here, and I'll move the stop to 120. It's only a small amount of money, but that doesn't matter. When we trade the big account, obviously it's bigger size. Remember, this is only $6.25 a tick. So we've actually got 11 ticks in the market. Not a great deal in that period of time, but that's all the market gave me today. Some days it gives me much. We had a much better trade in the S&P this morning. And I actually think this week, tomorrow, we're opening our live trading room in the morning. There are 3 stocks, because we look at stocks as well in the trading room, that are definitely looking very, 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 very bullish. Bullish, not bearish, bullish. And ironically, Jake mentioned a point earlier in his presentation that he used the news about this Portuguese bank. I mean, what on earth that's got to do with America? They were shaking the market out. I mean, it was an opportunity to buy. I actually agree with Jake. There was an opportunity to buy there. So, Cal, on crude oil, you can go back. In fact, on all of our trade alerts, you can go to tradingthemarkets.com and have a look for yourself and actually check. Now, we are, you can't, it's illegal unless you're registered to start showing profit and loss. We are now registered, and very shortly we'll be in the UK, and we will have a fund where you can track, it'll be public, all our profit and loss on our trade. You'll be able to do that from the website. But we were in the US, we still have a US company based out of Chicago, but we are opening, a UK fund, which is why I moved back to England. But again, one of the things we don't like to do, and I'm very, very, very anti this, is start telling you how profitable we are with these setups in the past. It's rubbish. Past price is no indication of what the market's going to do in the future. So we trade live, as you can see here, in the room every week, twice a week, and you can see the results for yourself because we're trading real money. And that's how we do it. But we're very transparent in that respect because, again, it's very easy to look in the past. What I'm showing you here is happening right now. And that's, as a trader, what you want to see. You want to see what's happening in the market now at the right edge with an interpretation. That's what's happening. You have got a volume spike down here, which is driving this little mini rally on this 1 minute chart. Okay. All right. I'm not making thousands of dollars on this, but I'm not trying to. I was in this trade earlier because it was a trade setup, and that is a trade setup. No doubt about it. And you can see the diamonds now. You see these are turning green every other bar. That's showing me that the market's trending higher. The blue bars are showing me that the market's trending higher. But with crude oil, by the way, we did do a trade alert a few weeks ago to short crude oil at a time when the unsettlement in the Middle East was very negative, and everyone was saying that crude was going to go to 108, 109. I'll actually show you the chart, actually, and the setup. Okay, now what I'm going to do, because I don't want to keep in this trade while I'm finishing here, I'm just going to try and get filled here. We'll see if it's very slow, but you can see the principle, you can see the trend, and you can see that 1 minute charts actually can be traded. I don't trade them myself, but we've got customers who do trade 1 minute, 3 minute charts. Now, usually I wouldn't want to be sitting in a trade for 2 hours to make $68. But if I'm trading 20 lots, it's worth it. Okay, there's my fill. So let me just cancel all, make sure I'm filled there. Again, I may get back into the trade after we've finished here, but tomorrow in the live trading room, natural gas is what we're going to be trading. Okay, I've got the message on trading with market manipulation. Okay, great, good. All right, so what we're going to do now is we'll go and have a quick look at crude oil. Okay, is there any questions about this chart? Okay, now that, again, let me just be very clear. That's the account I trade publicly. It's 4855. That's the British pound. It's a currency futures contract. I'm long because of this. Okay, and I took some trades earlier in the trading room as well. I may even be able to get long again, but I'm not going to because I have another engagement. But is there any questions at all before I carry on? I've got about another 20 minutes left on the looks of it. I'll just wait and see if there's any questions from the audience. Can I just ask you all a question then? Do you agree that ultra high volume here is important for you to be looking at now? Do you agree at least that there is some importance there? Let me ask you that. I just want to see if people agree. Can you see why professional money buy on these down bars? Yeah, a lot of customers, Steve, do use market profile with TradeGuider and VSA, a lot. It's very closely aligned. It's based on the Wyckoff method. Everything I'm showing you here is the Wyckoff method. That's what we're seeing. Yeah. Volume has everything to do with price action, Gillian. You know that. You've been following our work for many years, so you can tell this audience, I'm sure, that volume has everything to do with the price action. You can't argue with it on a chart in a live trade. I mean, it's very difficult to argue with a live trade when the market's moved based on the principle, whether it's a 1 minute chart or indeed, if you look at the bigger time frame, the one I like to use, by the way, is the 15-minute chart. It really is a nice trade, chart to trade. Okay, you can see it all clearly here. You can see why the market became weak up here. All right, you can see there's a signal there telling me that what we call distribution is taking place. Down here, we've got accumulation taking place. Okay, we just had a signal come in actually on the 15-minute chart telling me that maybe could be a bit of selling coming in. But overall, the 1 minute chart at exactly the same time as the 15-minute chart gave a setup, and that's why it's going up. Jay says charts reflect the now money and the money doesn't lie. No, and the chart doesn't lie, Jay. RR says, what about dark pools volume? They don't get reflected. No, they don't, so we can't trade with them. Simple as that. We don't have to. The dark pools are trading amongst themselves. They're the smart money. There's still massive, massive, massive liquidity in the exchange traded markets, which is what I trade. I don't care about dark pools because I can't make any money from a dark pool. Now, when we open our fund, we may well join a pool, but at the moment, no way. I'm trading exchange traded volume. And so are you. That's what you see. You trade what you see. I don't get involved with the conspiracy theories of dark pools and how they affect the market. When we're trading on exchange traded volume or tick volume, which is what we have in Forex, we're seeing the movement. And remember, trading is about making a decision, an informed decision, minimizing your risk, which I immediately did on that trade, and locking in profit. That's all it is. There's nothing complicated about it. But what TradeGuider does and what VSA does is allow you to recognize profitable opportunities that don't rely on news, don't rely on analysts, don't rely on media. And if you don't understand how to read a chart, we do the work for you at tradingthemarkets.com. So you don't even have to do the work yourself. We'll show you when there's a setup. We'll show you. That's right, Wayne. We look for the high volume activity, and on that activity, we see what the market's doing. Yeah, Gillian just says people who are trading without volume are probably trading blind, and I think that's a fairly realistic statement to make. If you're not using volume, then you are trading blind. Now, should we go and find another trade? Let's go and find one, shall we? Let's see if we can find a trade. I've got 20 odd minutes left, so let's see if we can find another trade. So British pound went up, as we can see. Now, let's go and have a look at the S&P, which I traded. Now, I traded it short earlier, but it's actually changed behavior. It's actually pushing higher. Maybe a trade here to the long side. Okay, so let's bring up my trading done. Okay, now again, we're only trading one contract on if we trade now. Let's just reset that. Okay, so now what we're going to do is we're going to see if the market responds best to this supply. Okay, now I wouldn't go long at the moment because you've got this in the background. and the market has trended down 4 bars. See, these bars are turning red. That's a proprietary system. Now, we might see something here called no demand, which is a low volume bar, narrow spread, and it could be that the market's about to turn and retest down to 1959. So I'll try and explain to you an actual live trade and see if we can actually take a position. Carl says, is there a trade on the crude oil setting up? Yeah, these grey rectangles in the chart of TradeGuider, they're proprietary to us. They are indeed support and resistance levels, and they're based on trend channels in the past that collide into the future. Again, they're written about in my book, Steve, so just read the book. It explains them in a lot of detail, because I don't have time to explain them all here. But they are, you can see what's happened here. We hit some resistance here, but we've got a hole here, which this price action could go through. Because when you have a gap in a trend cluster, and I've got above me here quite a bit of resistance at the top, so I could put a stop in at 1964 and look for the market to break the low of this bar. And if it went below 1960, I'd probably short it, because you've got this in the background. And what this has done is knocked it sideways. And we're now trading right on the close of this bar. And it's the highest volume bar that we've seen. Now, again, I don't trade against these diamonds. Okay, you see these diamonds, they're green. If they stay green, I don't go short. I want the trend to go in my favor. And again, we've got this particular system is built into NinjaTrade MT4. This is what it looks like for those of you that use either Infinity platform or... Can I just ask you, what platform do you use to chart the market? What platforms are you using? What platforms are you using to chart the market? Just to help. Okay, this does work in MT4. Yeah, exactly the same as I'm showing you here. Okay, here's the natural gas short trade, look, which is working very nicely. There's an upthrust, and we've come down. The trending system here is very much to the downside, which are these red bars. And you can see that this here, on these time frames, is telling me that we're trending down, and we issued a short alert, and we've fallen. So no surprises there. Okay, there's a video on this site which you can by all means take a look at, which shows the natural gas video. I'm going to make it public later on once I've actually watched the development of the trade. But this is the natural gas futures market that we were looking at here. Okay, all right, let's go back to TradeGuider then for a second. If you want to find out more about the methodology of what we're teaching, then go to marketmanipulation.com, get the free video, watch the video, and you'll learn what we know. It's in that video. It's in that video. Yeah, this is, I was asked a question earlier about these grey. You can see what's happening here. This is what we call a trend built into the software. And it's showing me, actually, I probably, looks like I got out the trade just as we hit resistance, and it's bumped up against this grey box, which is telling me there's resistance to price. You can see, and the market's pushing down against it. Roxanne says it's not working. The ebook and video. Okay, let me just double check that. I'm pretty sure it was, but I will double check that to Roxanne. Thanks for letting me know. Has anyone else gone there and tried that? If you could just let me know if it's working or not, because it should work. If it's not, try a different browser. But it should definitely work. Let me just have a quick look. It worked from. Oh, it does work. Okay. Okay. It does work. I won't need to go and check then. That's fine. Yeah, I thought it did work. I thought it did work because we tested it earlier. So, okay. Now let's go and have a look at crude oil. Then a couple of people asked earlier on were inquiring about crude. This particular method works with crude oil, gold, silver, natural gas, pork belly. You see what I'm monitoring in my TradeGuider program. It's called TradeGuider RT, which is our premier platform. It's our top platform. And again, you can see what's happened here. Natural gas is falling. You can see the trending system going down. Gold is pushing higher. Crude oil, someone said there was a 3-minute chart setup on crude. Let's go and have a look. You know something? I'd actually want to be long here, not short. Because actually you've got a test and the market, they're testing this volume. If you get another test here, that could be a setup. That could be a setup. So I have found one here, and actually I didn't find it. One of you in the room did. But yeah, if we get a test here like this, you could see higher prices. I think crude's going to go through 103 at the moment. Roxanne, if you want to email me, in fact, if you email my colleague, if any of you need any advice or you need any help, if you just email Laura at TradeGuider.com, she's in sales support. She can help you with anything. Any questions, if you want a demo of the software, anything like that. If you want to come to one of our live trading sessions, yeah, we can do that. Now, here's my daughter. Say hello to everyone.
Hi.
Say, my name's Olivia.
My name's Olivia.
And Daddy's teaching me to trade.
And Daddy's teaching me to trade.
I am. And hopefully you'll be a lot better than I was when I started. Yes.
Daddy.
And how old are you?
I'm 5.
You are 5. Okay, good. Now, Daddy, you know what this chart says. Look. See the green diamonds, blue bars, and a green signal. It's going to go up, right?
Yeah.
Good. Okay. Well, don't. Yeah. You need some. Off you go then. You take that. Yeah. Believe it or not, you think I'm joking. I am actually teaching my daughter to read charts. I know that sounds stupid, but actually you start young. That's what I learned. She's doing well at school, and she can actually identify now when something's going to go up or down based on the principles. And you know, it doesn't take long for kids to recognise things. Yeah, Wayne, there was. Yeah. Titi says females make better traders than men. That is actually true. That is an absolute true statement. In our fund, we're employing 2 ladies to actually come and manage the fund. And in fact, someone who works with Tom Williams is a lady called Rita Offen, and she's a super trader. I mean, and she learned everything from Tom from scratch. Now, we've got a down bar here, okay, on crude, but look at the volume on the downside here. So look at the volume. It's dried up on the downside. Now, what you want to see, if you're going to get a trade on here, is you want to see a principle first. Don't just look at a bar and say, oh, it looks like it's going to go up. I think it will go up because you've got this in the background, and I think it will spring higher because these 2 bars are closing up near the highs, and this next bar has closed on the low. But I only trade crude on my big account. I don't trade it on the small account because it's too volatile. You can easily get stopped out. Now, when you look at a chart, one of the most important things that I teach in my books and also in my seminars is how to follow the trend. I know it's been talked about many, many times, but look, here, it'll take a couple of hours, but go and look at the video tonight. You'll see here that on the 4-hour chart here, we've got clearly red boxes. What does those red boxes mean? They're denoting that the trend is pushing down. The next thing we denote is on the 60-minute chart, the trend is going down. So the river is flowing south. The 15-minute chart, the river is flowing south. And here we've got multiple reasons to be short. Look at the signals. We've got a little bit of congestion on the 5-minute chart, but once those change to red, it's another short trade. It's a no-brainer. And again, in the video, it explains it all, which was sent out now 7.5 hours ago. And again, look at the move that we got. It was a really good move, short, in natural gas. VSA works, volume spread analysis, works because it's based on universal laws. The universal laws that drive the markets are supply and demand and the imbalances thereof, cause and effect, effort versus result. Here's your effort to go up on the volume. The result is falling prices. There must be sellers there. Supply is selling. Demand is buying. Does this work for stocks? Absolutely does. If I go and take a look at stock charts, I can pick, I mean, we've done several alerts on stocks, but I'll show you one that we did a while back. This is one of my favorite signals, and I'll finish up with this before we take any further questions. We've got about 11 minutes left. This was the NASDAQ Biotechnology. Yes. Now, I mentioned to you earlier that there's a signal in the software that I consider to be a buy signal. I mean, it's not, I don't even hesitate to say it's a buy signal, and it's BIS. Here's the weekly chart. Okay. So what I'm about to show you, Gillian said, Gavin, why is the red bar no supply? Because the volume's still too high on that. You're talking about crude oil, Gillian. The volume's still too high. No supply would be a very, very low volume. Now look at this stock here. This is an absolute classic example of Wyckoff at work. Now here we can see a signal that I referred to earlier, which is called bag holding. Okay, just here. And you can see that after that signal appeared, for about 7 weeks, the market made a rally from the low here up to $22. And that is a very, and please do read my book and understand the importance of bag holding, because if you see it, the news is going to be bad. Everyone around you will be panicking and selling. And the CNN reporter will be looking at you grimly. Everything's going down the toilet today, blah, blah, blah. Everything will be bad. But once you understand VSA, the next week, if all that here was selling volume, we wouldn't have too higher closes. Would we? Activity, professional money have started to buy into these bars. And that volume is the highest we've seen for months. Okay? And again, if you go and look at the video at marketmanipulation.com and study that tonight, it works on iPad and all of the others. Go and look carefully at what Dr. Gary Dayton, who actually presented with me, says in this situation about bag holding and what happens when you see a shakeout or panic in the market. Panic in the market is your best opportunity to make money. Good news in the market where everyone says buy, buy, buy is your opportunity to short the market. That is what you will learn when you A, read my book, B, when you become a member of tradingthemarkets.com, which sends you the alerts, and then C, come to the live trading sessions. Come and see for yourself. Do we always make winning trades? No. Sometimes I have to cut my losses just like every other trader. But I've been doing this now for 15 years. My whole life is based on this. I own several websites, and we have a fund here, a hedge fund in England, and we're all basing our decisions on volume analysis. Jake mentioned earlier in his presentation before mine that he has his own way of doing things. And if it's successful, that's absolutely great. Okay? All I'm showing you here is a way to look at the market that makes sense. There is no mathematical formulas. There is no complication here. Everything's based on trading within trends, looking at 4 time frames, and finding the best trade setup when the market's being marked up, or indeed marked down, by who I call the smart money or the professional side of the market. Do I cut my losses quickly? You know something? DD, Tom Williams, when he taught me to trade, said the most important part of trading isn't making the profits all the time, it's knowing when to get out of a trade that's not working. So the answer to that question is, you'll see in our live trading room, I trade with a stop, usually a very tight stop. I don't get stopped out too much, but usually if I'm on the wrong side of the market, I don't let those run. I just don't blow. My golden rule in my trading plan, which I will share with anyone that joins tradingthemarkets.com, you get access to the trading plan that Tom Williams and I have had for 15 years, is no more than 2.5% of my capital in any one position. And if I'm trading more than one position, never go more than 6% of that capital in any one position. And if you do that and you stick to it, you start to find the little trades. Like today I've made maybe $250 on the small trades that I took, only trading one contract on a small account, they all add up eventually. They add up, and you can start to compound. But the biggest difficulty people have, unfortunately, in the markets is they're very influenced by the media, the news, and what they think is helping them make money. And it's not. It's actually not there to help you make money. Professional money, devious. The market can be devious. You will think that something's going to go up like gold. Let me finish on this example. This to me was an absolute classic. An absolute classic. Let's see if I can find it. This is a classic. Right? Let me show you what I mean. And then once you've got this knowledge, you'll have this knowledge with you for the rest of your life. And it will be the most rewarding thing to be able to look around you at all the people that are making bad decisions. Now, I mentioned earlier that Goldman Sachs said that prices were going to go up. They went up for 2 weeks, then collapsed. Well, now here, look at this. Monday, June the 24th of 2013. Okay, hopefully you can all see that in a second. I'll wait for it to come through. Can everybody see this headline from the UK newspaper, The Guardian, which is a highly regarded newspaper in England? Can you all see that? Monday, the 24th of June. Okay, Goldman Sachs are forecasting lower prices in gold. So what do you think happened to the price of gold, everyone? What happened to the price of gold immediately after this was announced? Wayne, you know what happened. Yeah, but here's the thing. If we look at the chart, we've got a blooming great signal underneath it. I'll show you. Because Tom and I went long. I'll show you. It's quite outstanding. Let's put the... So this is the weekly chart of gold. Okay. This is the week of the 28th of June, 2013. We get the news announcement that gold's going to fall further. And what happens for the next 10 weeks? There's the chart. Chart doesn't lie, guys and girls. The chart does not lie. Look at the volume. The third highest volume on the chart. It's on a down bar with a green signal on it. I hope you're starting to understand what we'll teach you at TradeGuider, okay? We're not going to talk statistics. We're not going to talk about high percentages and how great we are. We're not going to tell you that, hey, you buy our program, you'll be making 100% profit next week. That's nonsense. That's snake oil. It's useless to you. We'll show you the truth. We'll back it up with evidence. We'll prove to you we're telling the truth. And everything we say you can scrutinize, and you can come to our live trading room, see for yourself. Right? We're trading real money in real time at the right edge of the chart, doing trade alerts, which are in real time. So we're not going back. You're getting an alert on your phone within 5 minutes of me sending it out. You'll have it. And some of those trades are investment trades. Some are swing trades. Some are scalp trades like we did today. You go and look at the videos. They're all date stamped. They're all time stamped. Over and above that, we will teach you and mentor you in the Trading the Market service to learn to be contrarian, to be a wolf and not a sheep, and to understand that you want to make it in the trading world, you're up against some very clever, sophisticated people who understand how you think and act. But we will put you on the right edge of the trade, and we will show you that even if you're trading a small account, be it Forex, futures, stocks or commodities, if you've got good risk management profiling and you have a trading plan, you've got half a chance. Half a chance. No, we don't do futures. We do stocks. We do options trades. I'm trading binary options, for those of you who know what those are. Just starting to do that now. So we do trade options. Gillian, on gold, I'm still bearish eventually, but at the moment I've been long gold. And on the S&P, I think we need a bit of a corrective move down to the bottom of the trend channel. So at the moment, I'm a bit nervous about buying because it's gone too high. So I'm probably going to be a seller next week. To get the free ebook, you just go to this website. Go to don't think I've put it up here actually. This is the Trading the Market site. But what I'll do, I'll just show you. If you want to go and have a look at one of our alerts, this is how you do it basically. When we finished here, if you go to tradingthemarkets.com, so it's trading, ing, themarkets.com, I'll put that in the room. In fact, actually, Jan, if you could put that up for me. And then here, if you click on Take the Tour, it's just tradingthemarkets.com tour.html, and then you can see here examples and details of the trading room. We do not offer any free trials of the trading room because we're educating people in there, and I can't have time wasters. I'm sorry. We're busy. We're trading real money. Most of the customers in there are trading big accounts. We've got nearly 900 members of the Trading the Market service, and we don't ever offer free trials. And we very rarely. I'm not saying there's not going to be an upthrust, Gillian. There could be. Could be. Thanks, Yana. That's very helpful. Okay, I'm running out of time. So any more questions? If not, I'm going to hand back to Rolly and Yana and